trust the strategic direction.
When providing an overview of the findings of the Tax Review Committee, Chairman Sir Nagora Bogan explained the need for the country's taxation regime to be amended to better suit the current economic climate.
We told the Minister we're not here to be politically correct. It's only by looking at both the negatives and the positive that you're able to make an informed decision, and that will plan the crucible for change and transformation.
The findings and recommendations of the Tax Review Committee were completed and presented to Treasury Minister Patrick Pruaitch recently.
So its reliance on income tax is both personal income tax and corporate income tax that accounts for about 34% of the government revenue. So the committee in its findings has recommended that PNG change the tax mix and shift it away from relying heavily on personal income tax and corporate taxes to a more broad-based consumption taxes, as well as broadening the economic base.
In light of the heavy reliance on personal income tax, the committee has recommended that the following be done: raising the tax-free threshold from the current level of 10,000 kina to 15,000 kina and gradually 20,000 kina. This is to remove the large numbers of low-paid employees from the formal sector from the tax system. The committee has also recommended that the marginal tax rate of 22% be reduced to 20% and the current tax rate of 30% charged on employees earning between 18,001 kina and 33,000 kina annually be removed. This, according to the committee, will provide an incentive for people to seek formal employment and also seek better paying jobs. But also equally important is that salary and wage earners will not be paying too much tax. While the reduction in personal income tax may be welcome news for many in the formal employment sector, it is important to note that revenue from other taxation components may be increased to ensure that government revenues remain largely unaffected. One such component is the Goods and Services Tax, or GST, with the committee recommending for GST rates to increase from 10% to 15%, a recommendation that will no doubt receive negative responses from members of the public, especially from those in rural areas and those within the informal sector. However, it remains to be seen if the government implements or tries to implement the committee's recommendations, or at least some parts of the recommendations, when it hands down the 2016 national budget this week. Merabatulo, National MTV News.